This is Nightly Business Report with Tyler Matheson and Susie Guerra. Brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
Microsoft's next chapter, the company beat street earnings expectations after a run-up in the stock price. Is the new CEO turning Microsoft into a Wall Street darling once again?
New rules. Should the internet be free and equal for all? Or should some be allowed to pay to get their product to consumers faster? Regulators are weighing in.
And settlement talks. Bank of America reportedly ready to pay as much as $10 billion to resolve mortgage-related litigation stemming from the financial crisis. Is the bank ready to put the past behind it? All that and more tonight on Nightly Business Report for Thursday, April 24th.
Good evening, everyone. This was a big and busiest day of earnings season. More than 60 of the companies on the S&P 500, including 5 members of the Dow Index, reported their latest quarterly numbers. And then, after the market closed, 2 of the biggest household names in technology came out with solid earnings, Amazon and Microsoft. We begin with Microsoft. The software giant posted earnings of 68 cents a share in its fiscal third quarter, 5 cents more than analyst estimates. It also reported better than expected revenues with more than $20 billion in sales. Shares rose as much as 2% in after-hours trading after rising nearly 0.5% in the regular session to $39.86. Sheila Dharmarajan joins us now with more on Microsoft. So, Sheila, as you looked at all the numbers, what's your one big takeaway?
Well, I have one word for you, and that's the cloud. It's all cloud-tastic. It has been all about the cloud for Microsoft. Really has been making a big push into cloud computing. And under CEO Satya Nadella, it does seem to be paying off. So web-based tools such as Office 365 and its Azure cloud services had big gains of more than 100% sales growth. Now, the Achilles heel for Microsoft is shrinking PC sales, and we did see some impact of it when it comes to the Windows operating systems. For this quarter, though, that was somewhat mitigated thanks to upgrades. But this is an issue that's not going to be going away. It's something the company's going to have to deal with. But in the meantime, the cloud is definitely saving Microsoft.
The cloud is where it is. Now, don't you go anywhere. We're not done with you yet. We're going to come back to you in just a second with news on Amazon. But right now, let's go to Josh Lipton, who's going to take a closer look at Satya Nadella, Microsoft's newly named CEO, and how his strategy for the company is already changing the corporate culture there and exciting shareholders.
Investors have cheered the appointment of Satya Nadella.
Thank you so much.
But can the new CEO keep winning over Wall Street as he implements a new strategic vision for the software giant? Since becoming CEO on February 4th, Microsoft's stock is up about 8%. In contrast, the Nasdaq is flat over that same period. Microsoft's investors want change, and Nadella is delivering it. Under Steve Ballmer's leadership, Microsoft's revenue jumped, but the stock dropped more than 30%. Ballmer's critics say he missed the 3 most important tech trends over the last decade: mobile, social, and the cloud. Nadella has stepped into Microsoft's C-suite with a very different strategy and style, often appearing in a t-shirt, jeans, and sneakers. The message: this is a younger, hipper, and more forward-looking company.
I think it's all part of the top-down image that Microsoft's trying to portray as they move to the cloud and become, yet again, ideally, a next-gen technology vendor.
The new CEO is making big strategic bets. He's forcing Microsoft to break away from its PC-centric focus. Microsoft recently announced that Office will be available for the iPad. Users can now go to the Apple App Store and access Word, Excel, and PowerPoint. Analysts say this move could generate up to $5 billion per year for Microsoft. Nadella also talks about a new strategy that emphasizes mobile technology. Tomorrow, Microsoft will complete its acquisition of Nokia. It hopes to boost its very small share of the mobile operating system market. And Nadella is working hard to grow Microsoft's cloud initiatives. That's a relatively small business right now, but one that has enjoyed significant growth.
A lot of the optimism in the stock is related to Nadella's cloud vision, as well as his history in cloud, that he's going to be the guy that enables Microsoft to make that leap.
Nadella still faces serious challenges, navigating a PC market in sharp decline, integrating Nokia and turning that business into a growth vehicle. But analysts have quickly changed their views of the old tech firm, and Nadella is giving Microsoft a fresh face for the future. Josh Lipton, Nightly Business Report, Silicon Valley.
Now we turn to quarterly earnings from Amazon.com. First quarter profit shot up 32%. It earned 23 cents a share. That was right in line with revised Wall Street estimates. Revenue rose to nearly $20 billion. That was a slight beat over forecast and a 23% gain from the same period last year. The stock jumped as much as 3% in after-hours trading. It pulled back after climbing nearly 4% during the regular trading session. Once again, Sheila Dharmarajan joins us. Sheila, the numbers were okay, I guess, but you hear from Jeff Bezos, the CEO of Amazon, a new deal a week.
Right.
So are we supposed to pay attention to those new deals or to these quarterly numbers?
Yeah, it really boils down to whether you believe in his strategy or not. Because let me tell you, he is sticking to his guns. He is really pouring money and pouring cash into expanding Amazon's business, and it's all coming at the expense of profits. In fact, analyst Gene Munster says they are spending money like drunken sailors. Now, look, the idea has been to invest for growth, and right now it does seem to be working. Sales for the quarter did grow more than 20%, and also newer businesses, all these deals that he's been doing, like streaming video services, has grown, and in fact, it tripled the number of views. Now, investors have been giving the strategy the benefit of the doubt. We're going to see how long they can keep going with it, because remember, Amazon did project a negative operating income for the upcoming quarter. That's a little disappointing.
All right, Sheila, thank you very much. Sheila Dharmarajan. Choppy day of trading on Wall Street with the markets ending the session little changed. That follows a mixed bag of earnings out before the bell, along with a mixed data bag on the economy. Orders for long-lasting big-ticket durables rose last month, but first-time jobless claims unexpectedly spiked higher last week. Also impacting traders, more saber rattling in Eastern Europe as Moscow began military exercises near its border with Ukraine. Now get this, the Dow was unchanged. That is the first time that has happened since Christmas Eve of 2001. It must mean that Santa Claus is coming tomorrow. The Nasdaq was up 21 points. The S&P was higher by 3.
Well, even though the Dow was unchanged, the biggest gainer in the Dow was Caterpillar. The world's largest maker of mining and earth-moving equipment beat earnings estimates for the first quarter. The gains come from cost-cutting and a rebound in sales to the construction industry. Not surprisingly, CEO Doug Oberhelman is upbeat on the outlook.
The good news is the U.S. is a little better, and I think the bright news for us, even with all the risks we see and the possibilities of other risks coming in China, our business is building in China, and all of our products and services are doing well over there. Our dealers are investing. We're expanding our dealer model throughout the geography of China. So that's coming along pretty well. In fact, in China, our sales first quarter this year over last year were up 30%. And again, it's across all of our businesses.
Caterpillar shares rose nearly 2% in today's session, closing at $105.28, up 16% so far this year.
And Susie, 3M was another closely watched earnings report that came out before the bell today. The net income at the Dow component was up 7%, led by sales in its healthcare equipment unit. But the numbers disappointed Wall Street, and shares of 3M fell 1% today.
A big drop in profits at General Motors, down 88%, mostly because it took a charge of more than $1 billion for that massive recall of cars with defective ignition switches. So, how do things look at GM? The company's chief financial officer is cautious.
We're cautiously optimistic about the potential impact on sales. In March, our retail sales were actually up, and our retail share was up year over year. So far, through the first 20 days of April, we've seen improved sales versus March. So that's really a testament to the strength of our new products.
Ephraim Levy, equity analyst with S&P Capital IQ, now joins us to talk more about GM. I guess it's a case of half glass full, or half empty. He's talking about increased sales, but profits are down, international operations weak, Europe lost money, all those recalls. How is GM really doing?
Well, actually, if you strip out all the information, the mask, the core part is actually not doing that badly. They had the charges that with the recall, and that really took away a lot of the profits of the main market, which is North America. The other main driver is China. That's also doing well. So you have the two main engines doing well. Europe is actually on the way to improving, but there are negatives, such as in South America, there's weakness because of currency, political items, Venezuela, Argentina, and Russia is also, because of the political situation, their market, which is a big market, is weakening. But if you look out, they're investing now and they're launching new products with getting higher average transaction prices, which means their profitability is better. They're being more disciplined with the incentives. And we think that the challenges of 2014 prepares us for a strong 2015, where you'll see big profit improvement.
Has the stock been unfairly punished?
Well, I think there's a lot of concerns out there, and there are risks to the sales. But a company like this can handle a recall as long as it doesn't get better. You see Toyota; it cost them, but they came back with some of their market share. Ford's actually had bigger recalls in the past, and Ford's doing very well. So right now, the market is being punished for the bad news flow. But I think once we get past that, there's good prospects.
How do you think Mary Barra is doing as the new CEO? She's obviously been so involved with this recall crisis, but do we have any sense of how she plans to grow GM or what her vision is?
Well, her job, in my view, is really to continue the progress and process that started before she came. And that has resulted in award-winning vehicles. They swept the awards at the North American International Show with the best car, best truck. Their dealership rankings have been improving. The profits and prices have been going up in North America, their key market. What she has to do is continue that, but she's also been thrown this challenge of the fact that she has to deal with a recall that hurts the image. And I think what she's really shown there is that she's showing taking an opportunity to use the new GM to change how the company does business. It allows them to invest in improvements in the production capacity and manufacturing procedures that will help them down the road.
If you had one piece of advice to offer her, what would it be?
It's like stick in there, focus on the long term, and you'll do well.
Interesting. Ephraim Levy with S&P Capital IQ. Thank you so much.
You're welcome.
And still ahead, regulating internet traffic. Who wins and who loses, and what does it mean for consumers every time you point and click?
Bank of America is reportedly in settlement talks with regulators to resolve lawsuits about risky mortgage-backed securities that the bank sold ahead of the financial crisis that later went bad. Kate Kelly joins us now with more on the talks. You know, every headline we see, it's these big dollar amounts, 900 million here, 800 million there, and now this $10 billion potential settlement. You know, where are they in these talks?
Well, Susie, I have to tell you, this is almost like an appetizer compared to the main course that J.P. Morgan paid back in November. You may recall they paid $13 billion at the time, a record-breaking settlement with the Justice Department, and various things were tied into that with other government agencies and states as well. In this case, B of A looks like they may be looking to pay $10+ billion. It's apparently pretty early stage yet. We don't know the breakdown, and we don't know what the ultimate number will be. It may not be as high as that 13, but it certainly is awfully high. And these banks are looking to put this mortgage litigation behind them. After all, it's been 6 years since the financial crisis.
10 billion here, 10 billion there. It adds up to real shareholder money. Hasn't the company already paid billions, 13 billion or something like that, to settle residential mortgage claims? Where does the money go?
Oh, they've paid many billions, Tyler. In fact, I think it's north of 50 billion over time that they've paid. And you'll recall they bought Countrywide Financial, which was a big subprime issuer, so that's created some headwinds for them. But you're right. I mean, it has added up to a great deal. And earlier this year, they paid $6 billion already to settle with Fannie and Freddie, as well as with the New York State Attorney General. This would be one of the biggest hunks for them to put behind them. It would be the Justice Department, probably various states as well, and it would resolve quite a bit of the outstanding issues.
All right, so they already reported their earnings, so we can't go back and talk to them about how this impacts earnings. But what are you hearing from management, Brian Moynihan, the CEO, about what all this means to the other things that Bank of America wants to do?
Well, they're definitely very eager, and I haven't talked to them today, but they're definitely very eager to put these matters behind them, although they also want to be honest and try to manage expectations. And in that case, with first quarter earnings, that meant that their CFO said, look, this stuff is hard to predict. And we've set aside an additional $6 billion for legal payments. And that notion and the lack of clarity really sent the stock swooning that day during that phone call. It was interesting. Having said that, I think investors feel relief to think that some of this might be settled, and the stock has actually rallied in the week or so since then. So I think there will be relief if there's closure.
All right, Kate Kelly, thank you very much. Appreciate it. Shares of Verizon were the biggest decliners in the Dow today. They fell 2.5%. That's after the company missed earnings estimates, despite signing up 500,000 more wireless subscribers and netting $6 billion in profit last quarter. But analysts say the nation's largest wireless carrier may be turning off a whole lot more potential new subscribers by not offering big discounts and no contract plans like rivals AT&T and T-Mobile.
Well, Verizon is one of the big internet service providers keeping watch on proposed rules out of Washington over what's called net neutrality, regulating internet traffic so that it's open and fair to all websites, and so that the sites that use up the most broadband pay the piper. Morgan Brennan explains.
The Federal Communications Commission proposing new internet rules that would allow cable providers to charge companies a premium for access to their fastest internet pipelines. Simply put, companies like Netflix could pay providers like Verizon and Time Warner Cable for preferential treatment, getting their content to consumers more quickly.
There will be a fast lane that certain companies can pay to be in. This would make sense for voice services, video services.
The proposed changes strike directly at the concept of a free and open internet, or the idea that internet is an equal and level playing field to all companies, regardless of size. FCC Chairman Tom Wheeler says that the rules would be designed to ensure that access to these fast lanes would be commercially reasonable, though regulators haven't yet defined what that means.
From the BuzzFeed standpoint, this is not thrilling to me, right? The idea that other companies can pay to be in a fast lane. Look, we deliver video, we deliver images, we have long list posts that have tons and tons of images on them that are bandwidth intensive. I don't know what commercially reasonable is. I look forward to hearing what it is and seeing if we can afford it.
Analysts are still assessing the impact these new rules could have, but some say winners and losers are already starting to emerge.
I would say arguably the consumer is going to be the winner. I'd say arguably the cable companies are going to be the winner.
Cable companies with a new revenue stream could be incentivized to build out even faster broadband, which could be a boon for customers.
New technologies will be available to them because there's more profit in the ecosystem.
But not everyone stands to gain from this proposal. Netflix, which accounts for 30% of all internet traffic during peak hours, could be pressured to forge more deals like the one it has with Comcast, that has already increased the site's streaming speeds by 65%. But more deals will cost Netflix, which announced price increases for new subscribers just earlier this week. Netflix saying that, quote, the proposed approach is the fastest lane to punish consumers and internet innovators. Chairman Wheeler has said the new rules build off of the open internet concept already established in 2010. Rules designed to protect the consumer from internet providers that were becoming increasingly powerful. But the latest proposal is not set in stone. The FCC still has to vote on the issue next month and allow a full public comment period. For Nightly Business Report, I'm Morgan Brennan.
We begin Market Focus with after-hour earnings from Visa. The credit card company reported a 26% jump in profit. Higher operating revenue and payments volume helped up the credit card company's bottom line. Revenue came in just about where the street was expecting it to fall, and shares did fall initially after the close. The stock was up slightly in regular trading to $209.40, as you see on that graphic. Starbucks also reported a higher quarterly profit that matched Wall Street expectations. Revenue was higher, but it came in lighter than estimates. The coffee chain also raised its outlook for the full year. Shares were initially up after the bell. The stock ended the regular session up about 1% to 71.09. And Aetna posted record first quarter results, helped by a surge in profits from its commercial business and by adding new customers. Medical membership rose by more than 500,000 new subscribers in the quarter, not only on the new government health care exchanges, but Aetna also added clients in its traditional large corporate business. The insurer also raised its forecast for the year. Shares of Aetna climbed nearly 6% today to $72.96. And United Continental said its first quarter loss widened, and that sent shares way down in today's session. The airline saw expenses increase and revenue fall. It blamed flight cancellations from the harsh winter weather for the disappointing earnings. Those cancellations cost the company $200 million, it says. Shares tumbled almost 10%, 41.53 the close.
But American Airlines flying high after reporting a record first quarter profit. The company got a boost from the sale of takeoff and landing slots at Washington's Reagan National Airport. Also, operating expenses fell slightly, but revenue came in lighter than estimates. Still, shares rose slightly to $37.26. Johnson & Johnson announced it'll raise its quarterly dividend by more than 6% to 70 cents a share. This is the 52nd straight year that the company has hiked its dividend. Still, J&J was off slightly to about $100 a share. Shares of Elizabeth Arden surged today on reports it's hired Goldman Sachs to explore a sale of its business. The cosmetics company has reportedly reached out to a small group of potential buyers. The stock jumped 13% to $36 a share. A lot of healthcare deals this week, and here's another one to tell you about. Zimmer Holdings said it would buy rival Biomet. It's a deal valued at more than $13 billion. The combination is expected to make Zimmer the second largest seller of orthopedic products behind Johnson & Johnson. Shares of Zimmer jumped 11.5% to $101.97.
And government safety officials are proposing new rules regarding the sale and marketing of e-cigarettes, the first federal regulations ever for the increasingly popular alternative to traditional smokes. Eamon Javers has more.
Those electronic cigarettes you've seen popping up everywhere lately have also gotten the attention of the FDA. And now the federal agency says it wants to regulate e-cigarettes for the first time and to find out what's actually in the products. E-cigarettes are battery-powered devices that heat liquid nicotine into a vapor that users inhale. Supporters say they're safer than cigarettes because users aren't also inhaling tar and tobacco byproducts.
If you're trying to be healthier, trying to quit smoking, this is a much healthier alternative than lighting up a cigarette.
But the FDA says it's worried about the fast-growing product.
It is an unregulated environment with respect to these products. We think that the FDA can and should have a role in the oversight of these e-cigarette products and other tobacco products as well. And that's why we're moving forward today to try to make sure that we can extend our regulatory authority.
And the FDA points out that the nicotine in e-cigarettes is addictive. And officials there are concerned that children might start using nicotine through e-cigarettes before moving on to tobacco. There are now millions of people around the world smoking e-cigarettes like this one. It's become a $2 billion industry. The FDA's proposal today doesn't necessarily mandate any new changes, but it does put the FDA on the road to regulating this fast-growth new business. For Nightly Business Report, I'm Eamon Javers in Washington.
Coming up one day after Apple wowed the street with a big stock split, a buyback, dividend hike, and earnings, is the stock now more attractive to small investors? That story next. Four tech giants have agreed to settle allegations of conspiring not to poach each other's employees. No terms have been disclosed, but Apple, Google, Intel, and Adobe have settled a huge antitrust class action lawsuit with about 60,000 plaintiffs over backdoor agreements not to start a salary war by hiring away one another's workers.
Wall Street was buzzing about Apple today after blowout sales of iPhones last quarter and plans to return more money to its shareholders and split the stock to make more shares available to more investors. And that news sent shares skyrocketing more than 8% today. That's its second best trading day ever for Apple. Dominic Chu takes a look at what Apple's latest moves will mean to small investors and whether this may be a good time to divvy those shares up.
Apple wowed investors with not only a dazzling earnings report, but also news of a boost to the quarterly dividend, an increased plan for buying back shares, and a 7-for-1 stock split. So the plan? Not only to show that the company is friendly to shareholders, but also to make those shares accessible to more potential shareholders. The stock split doesn't change the overall value of the company or the fundamentals of the business. It does, however, lower the cost of each share. So the big questions are, will Apple stock be more attractive to average investors? And what if it were to ever make it into the Dow Jones Industrial Average?
So definitely brings more integrity, more backbone behind it, huh?
Yeah, I would buy the stock. Is it give me a good deal? Yes.
Good investment, yes, definitely. I think it's just going to get even better.
The stock split will allow more types of investors to buy in, and in theory, that could help boost the stock price. But stocks that split don't always end up outperforming. Take a look at companies like Under Armour, Google, and MasterCard. Each of those companies has effectively split their stock since the start of 2014, and each stock has underperformed the broader stock market. Then there's the underlying concern about Apple's growth in the future. Investors are anxiously awaiting the next wave of new products, like new iPhones, iPads, and possibly new TV-related products. That could help propel the stock back towards its past record highs.
Whether it can get all the way back to its peak will depend on the kind of innovation we get in the second half. We're expecting a larger iPhone. We're expecting an iWatch. We're expecting something with Apple TV. The unfortunate part is they're not first movers in these areas. They're becoming increasingly so fast followers, and that has some implications.
This latest set of moves also solidifies Tim Cook's role as Apple's CEO. Apple continues to look for ways to energize consumers. But can the company and Tim Cook ultimately get out of the shadow of the late, legendary co-founder and former CEO, Steve Jobs? For Nightly Business Report, I'm Dominic Chu.
And that is Nightly Business Report for us tonight. I'm Susie Garrett. Thanks so much for watching.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody, and we'll hope to see you back here tomorrow night.
I'm Susie Garrett with the Nightly Business Report News Brief. An avalanche of earnings today. Over 60 members of the S&P 500 reporting results on this busiest day of the current earnings season. Microsoft beat analyst forecasts, even though profits fell slightly as sales of personal computers continue to drop. Profits at Amazon.com rose 18% as shoppers flocked to its website and video streaming service. On Wall Street, more saber rattling between Russia and Ukraine spooked investors. The Dow was unchanged, the first time that's happened in nearly 13 years. The Nasdaq was up 21 points as shares of Apple shot up 8%, and the S&P added 3 points. And strong demand for new airplanes pushed up orders for durable goods in March, but that was offset by a spike in jobless claims last week. Be sure to tune in to Nightly Business Report right here on your public television station.